Why Silicon Valley Bank failed? Silicon Valley Bank is located in the country United States, having its headquarters in Santa Clara in California. Silicon Valley Bank was founded on October 17, 1983 by Bill Biggerstaff and Robert Mediaris. SVB was the 16th largest bank in the United States at the time of its failure on March 10, 2023, and was the largest bank by $174 billion deposits in Silicon Valley. The main motto of this bank was to give loans to startups like venture capital and PE firms. Having all the things good, why the bank failed? SVB's deposits grew from $60 billion in 2020 to nearly $200 billion in 2 years later as the tech industry grew during the pandemic. That filled the lenders with confidence, and SVB had about $174 billion in deposits. Then, like any other bank, SVB invested its $128 billion out of $174 billion in debt like US Treasuries and mortgage-backed securities. But as the Federal Reserve increased interest rates to combat inflation over the last year, the firm's investments began to fall. SVB has been finding it harder to earn money over the last year because a key source of cheap deposits, the venture capital boom, has slowed down, just as losses in its investment portfolios have risen. Let us understand this situation in detail. Many of SVB's depositors are venture capital funded tech companies. When tech stock and startup valuation are increasing heavily in 2021, for instance, seemingly endless rounds of venture capital become unprofitable tech startups. But the brutal sell-off in tech stocks and downturn in startup valuation has slowed the flow of venture capital. That means money-losing tech companies are rapidly burning through the cash that previously sat as deposits at SVB, with a few fresh investor checks rolling in to help them out and puff up SVB's deposit base. Simultaneously, rising rates have driven down the value of loans and bonds that the banks hold in its portfolio. Now, let's look at the reason behind Silicon Valley Bank's sudden rush for cash. The parent of Silicon Valley Bank, late Wednesday, said that it was seeking to raise over $2 billion in capital after facing big losses on a giant batch of bonds it sold. And the surprising fact is that Mr. Greg Becker, CEO of Silicon Valley, sold his $3.6 million share stock just before 2 weeks of the crash. SVB sold assets amid a surge in withdrawals, which created $1.8 billion in losses. The stock collapsed by 60% on Wednesday, affected other banks and cryptocurrencies. Trading has halted on Friday 10th March 2023 morning, and by midday, and the SVB had been taken over by the Federal Deposit Insurance Corporation (FDIC). Now, what is the present situation? After the bank's closure, nearly $175 billion of customer deposits are now under the control of FDIC. The FDIC has assured depositors that they will have full access to their insured deposits. This is how the FDIC protects your money in the unlikely event of bank failure. The standard insurance amount is $2.5 million per depositor per insured bank for each account ownership category. And you don't have to purchase deposit insurance for this. How it is impacting the businesses? The companies which are having accounts in SVB banks are figuring out how to meet payroll instead of focusing on their startup companies. Insurance of $2.5 million won't be enough to keep paying to the employees for long. Well, if such situation happens with you, how you can protect yourself? Here are some of deposit methods which you can follow. Number 1. Deposits with liquidity as a priority. As a safety measure, choose 2 banks, preferably one public sector bank and one private sector bank, to start your secure deposit plan. This will ensure short-term liquidity and continued access to emergency funds even if one of the banks fails and is placed under a moratorium. Number 2. Deposit plan with medium or long-term savings as a priority. As a first step, your financial plans must fall in line with your medium and long-term personal plans. Today, banks and financial institutions provide several investment options that help with their planning, such as fixed deposits, recurring deposits, deposits in non-banking financials, corporations and corporates, mutual funds, insurance plans, small savings schemes. Investing one's hard-earned money must be done carefully, keeping in mind the liquidity and the returns, which in turn come with some risk. There are endless investment avenues available with risk and returns charted out by experts for your consumptions. Explore your options, evaluate thoroughly, and choose wisely.